Do you know about tax portability? Are you even thinking about selling or buying your home in Florida and you want to know what's going to happen to your taxes? Hi, welcome back. This is Natalia Echeverri with Coldwell Banker in Weston, Florida. And so, yes, tax portability is a way for you to transfer a portion of the savings you've incurred by having homestead exemption from one property to the next. So if you have homestead exemption, one of the many benefits is that they cannot raise your tax assessed value more than 3% in any given year. So with that tax portability, you can transfer up to $500,000 of value from one property to the next property that you're going to buy, especially if you bought your property a long time ago and the market values were a lot less than what we have today. So chances are that you've been saving thousands of dollars in taxes, so that's why this is going to benefit you. One thing to keep in mind is that you only have a limited amount of time to apply for that tax portability once you sell your house and you're going to get into your next or in your future property. I am not an accountant and I don't work in a title company, so I can only give you like the general details, but they can help you with everything you need to know in your specific case, okay? I am going to explain here how you calculate your tax portability depending on if you're upsizing to a more expensive property or if you're downsizing to a less expensive property. The county calculates that differently. So let me show you how it is done. So pay attention, I don't want to confuse you, and it's very simple. First, I'm going to go over upsizing. This is when you're going from a less expensive property to a more expensive property. So the first thing we're going to want to do is go on to your property appraiser website whenever your county is. Like if you live in Miami-Dade County, you will have to go to miamidade.gov, and if you live in Broward County, you go to bcpa.net. On there, they're going to come up with different numbers on your property tax roll for the market value of the property and the assessed value of the property. And keep in mind that the market value that you see in the papers or in the website has nothing to do with actually how much your property will sell. It's just more a figure that they use for taxes on the tax law. So don't think that that's the price that you're gonna get. Sometimes it's low, whatever, but just don't pay attention to that. So as you can see, the difference between the assess value and the market value when you are upsizing, so that amount is $250,000. Then what you're going to do is when you find your new home, whatever the new home market value is not at the time when you buy the property, but that is the one when the taxes come out. Your tax bill comes out, that's the market value that they're going to use to calculate your new assessed value. So in the case of this example, you will take your Save Your Home's tax portability amount of $250,000, and then also you'll get to subtract your future homestead reduction, because not only you are applying for tax portability, but you're also applying for homestead exemption. Not because one thing doesn't have to do with anything to do with the other one. You still apply for homestead exemption, and then of course that portability will transfer as well to your new home. With that being said, your new assessed value is $300,000. So that's a significant difference. That $250,000 reduction represents, and is probably more or less, if you were asking, you know, like not an exact number, but how much it is roughly, it will be about $5,000 to $6,000 in your savings in your taxes per year. All right, that is a huge help. So now we are going to go over downsizing, and so it's downsizing in price. So it is when you are selling your property at a higher value, and then you're gonna go to a lower price home. Okay. So regardless, you are always going to do the same thing. You're going to go against the property appraiser website, and then you look up their market value and your assessed value, and then you're going to need the market value of your next property, whatever that will be. So in this case, they use the same example as I did before. Instead of subtracting the assessed value from the market value, what they do is is divided by 400,000. So it is a 0.375. Then they're going to multiply that by the new home market value in the future. So that number, 0.375 times 300,000, comes out to be 112,500. So that's the new Save Your Home's Tax Portability amount that you get to reduce from your next market value of your next property, along with the homestead exemption as well. So in Miami-Dade and Broward is $50,000. Normally for a family, of course, if you have different scenarios, different cases, you can even get more depending on your situation. But roughly it's $50,000 what you get as for tax exemption every year. So for the sake of this exercise, your new assessed value overall in this case is $137,500, which is a very significant amount. I wanted to thank you so much for being here. It was a pleasure for me to share this video with you, and I will see you next week.